Listen up, the world changed overnight. Israel and Iran are at war, and the shockwaves are rattling the global financial system. This isn't just a regional fight, it's a crisis threatening economies everywhere. Headlines scream, markets panic, and uncertainty is suffocating optimism. Israel struck Iran after failed diplomacy, and Iran vows a massive response, threatening U.S. interests. The U.S. is evacuating personnel, caught between its ally and a wider war. Wall Street's reaction? Pure panic. The Dow plunged over 600 points, its worst drop in months. The VIX, Wall Street's fear index, spiked 17%, showing just how anxious investors are. Just last week, we debated interest rates. Now we're talking about war in the world's energy corridor. The game has changed. Every investment decision now runs through the lens of this conflict. The era of easy money is over. Welcome to a new reality. Let's talk oil, the lifeblood of the global economy. Brent crude has already shot past $100 a barrel, and analysts warn it could hit $150 if the conflict escalates. The Strait of Hormuz, the world's oil superhighway, is at risk. 20% of global oil passes through it daily. If Iran disrupts this choke point, oil prices will skyrocket, triggering a worldwide energy crisis. That means pain at the pump, higher costs for travel, shipping, and groceries. Everything gets more expensive. This energy shock acts like a tax on the entire economy, threatening to stall growth. Fear rules Wall Street. The Dow's nosedive is just the start. Investors are dumping stocks not over earnings but pure uncertainty. The VIX is surging, traders are buying protection, and optimism is out the window. Airlines and travel stocks are tanking as oil prices soar. Tech and consumer sectors are also getting hammered. Anything tied to growth is under pressure. The dream of a smooth 2025 is gone. Geopolitical risk now drives the market. Investors are scrambling to adapt to a world on the edge of wider conflict. In chaos, cash is king, but smart money seeks safe havens. Gold is surging as investors flee risky assets. It's the ultimate insurance policy against disaster. U.S. Treasury bonds are in high demand, despite America's entanglement in the crisis. Investors want safety, not returns. Meanwhile, defense stocks like Lockheed Martin are soaring. War is bad for humanity, but good for weapons makers. The flow is clear, out of airlines and tech, into gold, bonds, and defense. The market is bracing for prolonged instability. The rules have changed. Follow the money to see where fear is headed. The Fed's nightmare is here. Surging oil prices are reigniting inflation. The central bank faces a trap: raise rates to fight inflation and risk recession, or cut rates and let inflation run wild. Stagflation, high prices and weak growth, is back on the table, just like the 1970s. For regular people, that means your paycheck buys less, job security drops, and the cost of living soars. Watch oil prices, the Strait of Hormuz, and every Fed announcement. The main risks: a wider war, a global recession, and stagflation that erodes your wealth. The path ahead is treacherous. The easy days are over. Prepare yourself. This is a market of stocks, not a stock market. Stay sharp.